What's up, guys? This is Chloe Shook and Chris Shea here with the Shea Group at Keller Williams Consultants. And today we are here with our Q2 market update for 2023. So, you ready to talk about the market?
I'm ready.
Let's do it. So, we're going to talk about kind of some key indicators that somewhat take the temperature of the whole market, and then we'll talk about what that means for buyers and sellers. Because otherwise, why is this information even important if it's not useful? Right?
Correct.
Okay, so interest rates.
They
Seems
suck.
to be, yeah.
That's the technical term.
Yes,
They're high,
they are high.
7+% right now.
Yeah, low sevens, compared to where they were about, when we did our Q1 market update, they were in the low sixes. So what I'm seeing is that during the times where, they've been where they are now for the past probably month, they've been pretty stable. Whereas, when they're more volatile and they keep changing, that's when people are kind of hesitant to make a decision.
Yeah, I think, and to me, I think, we got used to a decade of 4%, sometimes lower, sometimes higher, averaging between 3.5 to 4.5. Everyone got used to that for a decade.
Right.
And so when we jump to 7, that's just not palatable. Nobody wants to go up 3%. What I'm seeing is that sweet spot is more like 5.5.
Exactly. Yes.
And I think when we touch on that or anything south of 6, we see a lot of increased activity in the market.
Yeah.
And I think that's kind of going to remain the same. Anyway, you're probably going to get into that.
Yeah.
So.
No, it's okay. I think that it's not necessarily just the affordability factor, although that plays a role. It's the uncertainty.
I agree.
And one of the things that's impacting interest rates right now, because typically they follow the 10-year Treasury, they're about 200 basis points away, or 2% different than that 10-year Treasury. But right now, they're almost a full percent higher than they normally are. So they're 300 basis points, 3% above the 10-year Treasury because of that economic uncertainty. So
Right.
I think
Right.
overall, rates are bound to go down at some point, or at least stabilize.
Yeah, and I think what Chloe and I like to do is analyze how all this comes into play, like from a more of a common sense with the economy standpoint.
Mm-hmm.
Like to us, we see obviously you get these higher rates, nobody wants to move because why do I want to give up a 3-4% rate to move and have to pay 7?
Yeah.
Maybe they'll do it when they're back down around 5.5, but it's just hard to do at 7. So we are starting to see some plays on the rates between builders and financing, creative financing. I know you've done some deals where you're getting quite a bit of things paid for your buyers on financing costs, closing costs. So there's still good plays out there even with the rates higher. And in fact, I've been telling many of my clients is don't let the rates scare you because now's the time when you have less competition in the market.
Exactly.
On both ends, sellers and buyers.
Yeah, it's not quite the same chaotic market that it was about 2 years ago. So that's rates. Inventory, we're at just over half a month of inventory, meaning that, if no new listings were added to the market, we would sell all of the homes available in about 0.6 months. So when 3 weeks, if that.
Yeah, and that's basically means super low.
Mm-hmm.
When I ran it last month, I think we had roughly the day I looked at it, a snapshot in time, we had about 2,000 homes on the market active that weren't already in contract. Actually below that. But anyway, call it 2,000. A year ago at the same time, we had 3,000. Yeah. So when you think, 3,000 last year was low, and now we're at 2,000. That's a third less homes on the market. And I think that's indicative of kind of where we're at even now, about a third less than we were a year ago on the market.
Exactly. Also, new construction right now is a larger part of that inventory than it was in previous months. So normally, new construction makes up about 10% of the available inventory, and right now it's more like 20 to 25%.
Yes, so. And I've actually gotten a lot of my, well, not a lot, but several recent buyers are now building instead of we went after several homes, existing homes getting beat out. Literally homes in that 300 range that we were offering, listed 275, we're offering 300, they're selling for 330. I mean, it's just that tight.
Right.
And they're getting beat over and over, and finally we found a way for them to get, even at that price point, into a new home build in a decent, an area that they wanted to be in, a decent school district for them, and in the price point they need, and they're excited to be building. So I think it's a great option because there's also incentives builders are running on interest rates and buy downs and things they're building into the price of the home, but it makes it more affordable, affordability.
Yeah, so maybe their threshold was 300 for existing homes, but when they find something that's new construction, because of these incentives on the interest rate and money towards closing costs, maybe their budget's a little more like 330.
Or even 350 plus,
Yeah, so.
Yeah, because you're talking, that 2 percentage points can be pretty significant. If you're getting a buy down to 5% versus 7%, it's a pretty significant savings on your monthly cost.
Yeah, absolutely. And then, last thing about overall market would be prices. Our average price per square foot right now is just over 200. That's for Franklin County, single family homes and condos included. So, even in terms of a year over year, last year at this time was 195. So, we've seen a dip, and then we've, recovered to higher than we were this time last year. So, in my opinion, we've already hit our bottom, and we're on the way back up. Yeah.
And I think a lot of that's a good point in that a lot of buyers think, well, I'm just waiting for the crash.
You missed it.
Yeah, and it wasn't much of a crash; it was a dip.
Right.
It's such an anomaly of where we're at versus times in the past. And I've talked about this in one of my posts. When a lot of people want to compare it to 07, 08, and we had 15,000 homes on the market then. Now that inventory built up over time, but still it was a lot more inventory. So that it was just buyers could get all kinds of deals. It doesn't matter now with rates higher, there's just no inventory, and we still have the demand, especially in Central Ohio where we have all this influx of business and growth development.
Amazon, Intel, Honda,
tons of
so
activity.
much going on. Yeah.
That's going to also drive supply and demand with everything supply and demand. So what we like to focus on too is how do we help our buyers and sellers that are either looking for their home, looking for investments. Me and Chloe both do a lot of that too, and we really focus on we're like a solutions based, like what makes sense, like where do you buy? So new builds, great idea. A lot of times new builds are in the suburbs. Maybe someone doesn't want to be in the suburbs. So what are some other options? Well, we've helped people that decided, I don't want to give up my house with 3.5% rate. Maybe they can rent it and actually make money. I've got someone that's considering it. They might make about $1,000 a month renting their home. If they can qualify to already buy a new home, which they can, they may buy, keep their home, rent it, make the $1,000 a month that goes towards their payment on that new home.
Right.
And then when rates come down, they'll refi. So they don't want to give that up, but they don't necessarily have to, because a lot of people with demand could be in a position to do that. And make a good amount of money off of it.
Yeah, and that's a perfect segue into, what are some solutions for buyers and sellers in this market? How can we get creative? Yeah, and that's a perfect example. A lot of I think part of the reason our inventory is so low right now is because people don't want to sell their home and give up their sub 3% interest rate. So like you said, maybe you rent that place out and keep that mortgage and use that profit to go towards, supplementing your new monthly payment that's going to be higher because of rates.
Right.
So
what
that's a good solution. Yeah.
And what were some of you had some deals recently.
Yeah.
Talk about those.
I think, speaking for buyers, what I've seen a lot of lately is that at that 250 to 300 or maybe even 350 price point, there's a lot of competition. But, the lower end of the market, like, low 200s and less, I had 2 deals recently where my buyers were able to get more than 3% of their closing costs covered. So that significantly reduces the amount of money that they have to bring to the table, or they can choose to use those funds towards a buy down, to make their rate less expensive. I actually won recently, OFA, the down payment assistance program. Sure. So that's great, but the problem with OFA is that you can't refinance for the first, it's either 5 or 7 years. So, and that I don't love that right now because I do think rates would go down the next 5 to 7 years. And for someone to be stuck at that rate, you know, and first of all, using OFA, you get a higher rate anyway. So what we did is we were able to negotiate for the seller to contribute enough money towards the buyer's closing costs that they didn't have to use the OFA program anymore. So now they've got a better rate to begin with, and they're not stuck there for 5 to 7 years.
Right, to be able to refi.
Yeah, so I think what I'm trying to say is I think on that lower end of the market, I'm seeing a lot of good deals pop up. We're not talking about getting homes for pennies on the dollar.
No.
I'm talking about, you know, hey, the seller's actually willing to give us money towards closing costs and fix some things.
Right.
Which, you know, in 2015 was like, well, obviously, duh, isn't that how it works? But, you know, the past couple of years, we have not seen any kind of seller concessions.
No. Buyers have had to give up like their firstborn kid to get a house.
Yes, exactly. Yeah.
And now, luckily, those are changing. So,
so yeah, for buyers, there's some deals for first-time buyers or you know anyone really on the lower end of the market, that low 200s and below. And then also, as you mentioned previously, look at new construction.
New construction.
Yeah, maybe your budget changes for new construction because of the way the numbers shake out with the incentives that the builder's offering on rates and closing costs. Because, you know, all of this data and, you know, looking at the market as a whole, that still doesn't necessarily have to dictate your deal that you find or your creative solution. There's always opportunities, and especially if you're willing to kind of get creative. And, you know.
And we can help with that. We can help people find those.
Yeah. Final thoughts? Where do you think the market's heading?
Oh, that's a good one. So I track a lot of that, as you know, and you do as well. You know, some recent data came out, so I think it's going to be somewhat favorable to the rates. Inflation seems to be steady. It's still there, but it's steady, dropping some. So I think all that bodes well. I don't know if we're going to see a huge drop in rates. We do think that we're calling it a cliff, but it's not a cliff in like home prices.
Right.
It's more a cliff in sales. So right now we're still in, even though it doesn't feel like it, our busy season because there's way less sales because there's less homes on the market.
Yes.
So percentage wise. But when we come to September and everyone's already moved for school, we get into that slower fall season. We're also going to have a huge impact from all of the student loan forbearance is all up, and that's all hitting.
Yeah.
So our predictions in our brokerage is that come September, October-ish, we'll see a cliff on sales.
Number of transactions.
Not in the market.
Equity or home prices.
Right.
Necessarily.
And again,
people are just going to kind of stay put.
Yes. And I think the plus to you buyers and sellers out there is that, like, I'll give you an example. Right now, already, we've had 60,000 realtors nationwide leave the industry. 60,000. In Columbus, I believe we're at 9,600 realtors, maybe even pushed over 10,000, I heard, during the height here recently.
We dropped.
Which is way more than we need. And now we're down again around in the 6,000 range. So we've already lost several thousand here.
Right.
The good news for you is there was a lot of realtors, great realtors out there, but you know, there's also some, it was pretty easy to get in the market and just sell homes and sling homes.
Yeah.
And the ones that are sticking around and doing things like starting a team in the middle of everyone else going backwards, which I don't know, we like to run in when everyone's running out, that are more solutions based, they're going to help their clients, you know, find deals, I guess. That's who you're going to be working with. So I think
it's more important now than ever to make sure that the agent you're working with is a full-time agent, you know, because there's a lot of these part-time people that are getting out of the business because it's just not making sense anymore for their...
Not financially.
Yeah. So, yeah, if you're looking to buy or sell in the Columbus market, even if you just want to have a strategy session and come up with a potential plan, reach out to us. We'll put our contact info on the screen.
Yes, and we have free home evaluations on our website. So that's very accurate, way more accurate than the Z estimate you're going to get.
Zillow,
so, and again, no obligation there. We just looking to help anyone that is in a position to do it. We're not high pressure salespeople, but we will be there for the ones that are ready. So
absolutely. thanks so much for tuning in, and we'll see you next time.
Have a good one.